Hey, welcome back. It's May 11th. I want to give a quick roundup on this week's developments and news on Bitcoin. Now, just following an earlier video I made this week on this topic, why we are seeing some rather interesting tailwinds in the Bitcoin price action veering ever close to its previous all-time high of 108K. I just want to share with you some additional good news that we are seeing and why I think May could be a rather interesting period for more tailwinds to be developed and in the weeks and months ahead of us. So let's jump into quite a few interesting articles that I'll run through with you. Now, Bitcoin is currently testing this 103, 104, 105K at the moment, based on a spate of positive weekend macro headlines. If I move down, it says that first one is to do with this trade talks meeting between the US and China has happened in Switzerland over this weekend. And the output of those were, as following Trump's words, a very good meeting today. Many things were discussed, much agreed to. A total reset negotiated in a friendly but constructive manner. We want to see, for the good of both China and the US, an opening up of China to American business. Great progress made. Now, if we just move on, earlier Saturday, Trump also announced a full and immediate ceasefire in the brewing war between India and Pakistan. We've seen a spate of attacks between each of these two countries. Now, given that Trump came in, wants to avoid any start of any new wars particularly, well, he's urged the two countries to just cease fire and just revisit their situation in order to avoid a full war breakout, which is very, very positive. And then the Russian President Putin said he was in the mood for serious talks with Ukraine and suggested talks without preconditions in Turkey next week. Now, as a result of this spate of trio good news, Bitcoin has subsequently rose to a few dollars of just almost $105,000 before pulling back, like I said, between $103,000 and $104,000 in the past 24 hours. This is really a positive, right? Not just for Bitcoin, but for asset classes as a whole, because we're still living under this macro dependent world. And it's true to say that even though in the previous turbulence, we've seen Bitcoin is starting to emerge as this decoupled asset from TradFi, from the macro. And it's just me saying this, as other economists and Bitcoin investors themselves are saying the same thing, that we are starting to see Bitcoin slowly but surely becoming decoupled from these macro developments, from TradFi, which is a positive thing, because ultimately by doing this it's going to be the ultimate hedge against any situation, which is really what Bitcoin is trying to achieve. So the next one is Bitcoin's price surging 104 has actually liquidated a handful of short positions. So there's this short squeeze happening at the moment because the short traders was trying to bet against the actual upward rally rather than consolidation and drops. So as a result, they're obviously being wiped out of the market. And really, this is precisely the reason why I've been trying to explain that we shouldn't place short-term bets or short-term positions in Bitcoin, because it's not like an equity stock or any financial instrument that you can place short-term bets in order to capture and capitalize short-term gains. It's unpredictable, and it's a very different type of asset. It's an asset that is rather unique. I'm not going to dwell on to the reasons for why I think they're unique. You can subscribe to my channel and view some of the videos that I published on that topic. But it's fair to say that Bitcoin is one of the kind digital assets in order to preserve your wealth and to grow it in the long term. So this is all the more reason why you shouldn't treat Bitcoin as that equity stock, that commodity or bonds or even gold, right? Because it's becoming a special asset and one that you can't time the market on. It's something you just need to dollar cost average and hold on to the long term. Another interesting article that I want to share with you, it says that it has actually broken the long anticipated $100,000 milestone, driven largely by strong fundamental catalysts rather than speculative hype. Right? These fundamentals, and this is important, include rising institutional interest, increased ETF inflows, and a tightening supply dynamic, all of which have actually contributed to the asset's powerful ascent. Really puts into perspective that you should certainly hold on to the Bitcoin holdings into the long term and occasionally dollar cost average as and when you're able to do so. Another interesting article, again, gives further testimony that Bitcoin is becoming indeed that risk off asset over time. Well, you've got the likes of Goldman Sachs, a major bank institution, have actually upped its stake of 28% of the BlackRock iShares, ETF shares, to $1.4 billion. This is not a small amount, and less so for a major banking institution such as Goldman Sachs. It goes on to say that has indeed amplified its bet on Bitcoin ETFs by adding almost 6 million additional shares in BlackRock's iShares Bitcoin Trust. This is one of the top out of the 11 US Bitcoin spot ETFs. The bank's most recent filing with the US Securities and Exchange Commission indicates it now owns nearly 31 million shares, up from 24 million in its last report. Again, another publicly registered company have actually continued to hold on, continue to add to their existing Bitcoin holdings, whether it's Bitcoin directly or through ETF shares. So we are seeing more inflows, more capital inflows into the asset, which should ultimately signal to you that investing part of your wealth in Bitcoin is not a bad idea. In fact, it's the opposite. It's the best thing you could do. I just want to share a few additional news, again, just to give you that signal that we are continuing to see a more Bitcoin rally in the weeks and months ahead of us. So this is one from Coin Corner on X, where it says, well, the boarding school in Scotland now accepts Bitcoin for tuition. Again, Bitcoin is now moving into other industries and use cases. So in the case of universities and educational institutions and academia, well, this is now clear that this is happening. And I think in the case of the US, there's quite a few Ivy League universities who've actually done the same thing. Rather interesting. Panama City now approves crypto payments for public services. So you can see the public services domain, governments, states, councils are all slowly but surely investing into Bitcoin. VanEck, which is one of the research analyst firms in the US, have said that Bitcoin Treasury bonds may help US refinance $14 trillion debt. Now, this is an important point because I have made a few videos on my channel. All the more reason why you ought to subscribe so you can review those additional videos at your own leisure. Well, this notion of Bitcoin-backed bonds, what this is all about really is trying to repurpose the traditional or conventional government debts in the stock market, but adding a component of Bitcoin into it. Why, you may ask? Well, given that bond rates aren't particularly attractive, pretty much are very low single-digit interest rate figures, which isn't at all attractive rate of return for investors who ultimately buy into government-issued bonds. By incorporating Bitcoin into the government-issued bond, what you're trying to do there is, at the end of the 2-year period, the government will have to pay back the 4%. But given the double-digit rate of return, CAGR return of Bitcoin, it's fair to say that the government will capitalize on the difference between the market-to-market price of Bitcoin at the end of the 2-year period, which is in a double-digit range, and the 4% interest that they'll have to pay back to the investor of that bond. They'll be able to cash in on that difference. So you can see why the Bitcoin-backed bonds, treasury bonds, is becoming another important use case for governments issuing these bonds, because they're going to make more money through this difference that I mentioned, that I explained a moment ago, where it's a win-win situation to the eyes of investors who are going to get their 4% interest rate payment back plus the principal amount, and the government, on the other hand, they will get the money and the interest, the net interest. So the 4% minus, let's say 50%, they'll get the 46% interest rate as a profit. So you can see that the government's starting to raise their eyebrows and say, well, this is a win-win for us, so we should get involved. So this prediction from VanEck is spot on. Other governments should take heed with what's going on in the US in terms of refinancing their debts by issuing Bitcoin-backed treasury bonds. Very interesting use case. So you can see Bitcoin is a positive for every type of actors, for every type of industry, and for every type of entity, as well as at an individual family level. So it's a win-win for everyone. And the next point, which I think it was rumored an awful lot, is the claim that the US could buy Bitcoin using Trump tariff revenue. Now, if you recall, Trump has actually signed an executive order a couple of months ago, I can't remember when, where he acknowledged that the US is going to have this strategic Bitcoin reserve. And that's the only digital asset that he's going to buy more of and hold it without selling any of it. Now, he said that he's going to do the purchasing of additional Bitcoins in a budget neutral manner, which means he's not going to use additional US taxpayers' money. He's going to use some of the tariffs that he's negotiating with the countries as revenues to buy into Bitcoin. So that's very interesting. And this is just one way where he can do this. I've heard another method from Senator Loomis, who is the denominated crypto queen, where in one of her videos, which I've also covered in my channel, where she claimed gold certificates. Now, the gold certificates that the US have are kind of outdated in terms of the price value. But by revaluing on today's price, I think it's a few $1,000s per gold of ounce, well, that's additional revenue that they can certainly buy into more Bitcoin. So this is another method in addition to what's been suggested here. And then just finally, there's a couple of other interesting points where other nation states are indeed starting to follow the train of thought with what the US are doing in terms of signing executive orders or ushering pieces of legislation in their national parliaments to approve Bitcoin as a strategic reserve. And that's in order to boost, as I said before, the national finances and, importantly, the debt without having to actually raise taxation, additional taxation on their citizens in order to cover the debt. It would make more sense if you were to incorporate Bitcoin as a national strategic reserve, hold it into the 10, 20, 30-year cycle, and at the end of that period, you can relinquish some of those holdings in order to pay off the national debt. That, for me, is the best, most intelligent way of using money without imposing additional taxation and financial burden to their citizens. Very, very interesting. And finally, Bitcoin, another Bitwise report said here is Bitcoin held by publicly listed firms climbs now to 16% in Q1. And this momentum of incorporating the MicroStrategy playbook, which is adding a proportionate amount of their Treasury funds, mostly fiat and Treasury bonds, which is the classical way of holding their assets on any corporate reserve. Now we are starting to see more momentum into following the Michael Saylor strategy playbook, which is to adopt the Bitcoin standard, i.e. convert some of their corporate held reserves into Bitcoin and hold it into the long term. Right. Another rather interesting tweet from X, as you can see here, who are the top holders or hodlers of Bitcoin? Well, if you look at the top corporate Bitcoin holders, you can see clearly Strategy, formerly MicroStrategy from Michael Saylor. His company have the most Bitcoins in their treasury. It's almost 530,000 Bitcoins, which is around 3% of the total supply. Very impressive. Followed by Marathon Digital. This is the top Bitcoin mining company in the US, have got just over 46,000 Bitcoins in their treasury. You've got Tesla, you've got Hut 8, which is another mining company in the US. You've got Simon Scientific, you've got the famous Metaplanet, which is a Japanese company. You've got some other interesting names, all listed here. And, you know, you can go on and on and on, but it's fair to say that the list is well over 150 publicly registered companies that have followed suit, and that train of thought is set to continue. So we just need to watch this space and treat this as evidence or as a signal that incorporating or putting some of your wealth into Bitcoin is the right thing to do. Another interesting chart here, you can see clearly, if you look at the top assets that are ranked by market cap, clearly gold is 22 trillion, and that is being demonetized as we speak, followed by Microsoft, Apple, Nvidia. Fifth position is Bitcoin. It used to be on 7th position behind Google, but now it's actually beating Google and Amazon. Impressive. Just over $2 trillion worth of market cap. So this is actually the amount of Bitcoins that's been minted and mined, which is over 20.5 million. But if you multiply that by today's price of 103,000, well, it would equate to this amount. And it's rising. So you can see It's impressive. It's even beaten both Amazon and Google. And the train of thought is clear. It's going to beat and demonetize Nvidia, Apple, Microsoft, and the eyes are on gold, where it's going to supersede gold in the next decade. That's the prediction by most of the famous Bitcoiners out there, and economists are saying the same thing, which I wholeheartedly agree, given that, it's just a 16-year asset. It's impressive. Out of thin air, you got $2 trillion of hard money invested in the Bitcoin network. This is not a Mickey Mouse invention like crypto token or stock or commodity. This is rather unique asset class that we all need to have. Another interesting table that gives you the rate of capital inflows that's been invested in the US denominated Bitcoin spot ETF products. So you can see over the last 2.5 weeks, if you add $1 billion on the 22nd, another $1 billion on the 23rd, 600 million, 700 million, 300 million, which was on Friday last week, you can see that there's billions upon billions of dollars invested into the US Bitcoin spot ETFs. And I'm not even talking about the rest of the global Bitcoin spot ETFs that are approved elsewhere in other countries like Hong Kong, Australia, Singapore, and some other many more countries who've just recently approved these Bitcoin spot ETF products. So it's fair to say I think it's well over $100 billion ever since its inception in January 2024 in the US. So this is set to continue. We're going to see more demand, more capital inflows into these ETF products, mostly from institutions and high net worth individuals, and sovereign states are also investing in this vehicle. So we're going to see more supply shock, more demand, which can only mean one thing, that the price ultimately of Bitcoin will have to shoot up through the roof. And then finally, the last table that I also include in many of my videos, and I just want to leave this as another train of thought for you, that we are indeed continuing to see this cheap money era, where in the last set of monetary policy committee meetings, these various central banks, whether it's the Fed, the ECB, the Bank of England, Bank of Japan, you can see that the tendency is quite unanimous. The last of monetary policy meetings have actually reduced their fund rates. In the case of the US, it's been 25 basis points, and it's the same in other central banks. The most recent one was, in fact, the Bank of England. It was last week, I think it's last Thursday, they've approved a minus 25 basis point to 4.25%. Funny enough, the ECB is the one that has the least fund rate at 2.4%. So you can see that the Fed and the Bank of England are the major central banks that still have a relatively high fund rate, which means that they have an awful lot of catch up to do in order to bring themselves on par with the ECB rate of 2.4%. And the ECB, as well as all of the other major banks, they're going to be continuing to reduce their fund rates over time, at least in the next 6 to 12 months. That is the expectation. And this means one thing: where there's a drop in fund rates, it means more liquidity is expected to be drawn into those financial markets, including the crypto and, most importantly, Bitcoin, as well as high-graded equity stocks. So this is a perfect opportunity to borrow cheap to invest in Bitcoin or your top chosen equity stocks. So this is very good news. And that's all I have to say today. I mean, all of these news, I just want to bring it to your attention because there's an awful lot of signal, an awful lot of good news, spate of good news, and what's left to come in the rest of this month of May means that indeed the Bitcoin is expected to rally, is expected to see more supply shocks as there is increasing demand, more liquidity and capital being invested into the asset class. And why it's a good thing that you should allocate some capital into Bitcoin and hold into the long term, because by the end of your long-term period, when you reach, let's say, the age of retirement, you're going to be the last person standing in terms of reaping the rewards of your efforts of holding and occasionally DCA into Bitcoin during these years. So if you enjoyed today's episode, please don't forget to hit the like button, to share the video to colleagues and friends, and if you haven't done so already, to please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.